Hello.
Hey, how are you?
Can you guys hear me?
Hello?
Hello.
Hello? Hi, can you hear me now?
Hi guys. I hope you guys are well and you had a nice weekend. I hope you're ready for the chats. Sadly, I don't think there's much happening in the markets right now because um we're going to start with GBP USD because we've been starting with GBP USD lately, so I think it will be a best option. So the reason why I think there isn't much happening, although there might be a trade coming, but um there isn't much happening because if you look at yesterday's movement, so I'm pretty sure yesterday's movement started around this area. I think, not sure, but yeah, should have started around this area, which means Asian session trended all the way, and this was basically New York and London session. Nothing happened during New York and London session, and then today again Asian trended. This was all Asian coming all the way down to where market closed yesterday. But then we all know that if Asian trends, that means London and New York have very high chances of consolidating, which makes me believe there isn't much. We have to wait for more information because if markets are not ranging, then we don't have a proper trade because markets are not really creating the support and the resistance that we need for price to keep on pushing. Because right now, market has just been ranging during Asian, leaving nothing for London and New York. But if we do get lucky and markets decide to trend for London and New York, then we might be looking for a sell. That's if this current candle closes well. So for our analysis, like when you look at the chart, when you look at the charts at the beginning of your day or your trading routine, right? You first have to decide, are my markets ranging or trending? And if markets have been trending, the high chances there is no trade for you. But if markets have been ranging, then that's something that's nice to see. But right now, we both know, or we all know that markets trended yesterday for Asian, and they also trended today for Asian. And if we look back at yesterday, London and New York ranged. This was London and New York. Nothing happened. That means we might get something very similar today. However, since we are traders, we will be looking for something just in case if we end up getting some volume. Because yesterday we can say it was because of the bank holiday. We can also add that, but today there's no bank holiday, meaning we might get something. So now we've established if our markets are ranging or trending, we can now try to like plot our analysis or our support and resistance, since that's all I use. So remember, we always said it's always good at the beginning of the week to look at your weekly candle to see how it closed. So since we didn't do a session yesterday, we'll do that today. But if we were starting, I'll show you tomorrow. We would have started our analysis on this time frame. We wouldn't have gone on the higher time frames because we already know what's happening. But since it's the beginning of the week, we will look at the weekly time frame to see what happened. And then we can start our analysis for the day. So if we look back at our left, right, remember the resistance that we were talking about last week or week, which price broke above. I'm not sure if it retested. Price hasn't retested yet. That is something that's best to note. Price isn't retested yet, and we all know that what breaks has to retest. So that's something to keep in mind. And then our next resistance should be, I'm gonna say right here. The reason why I'm going to say that, right, it's because when price made this high, right, when price made this high, right, it dropped and closed right here, and then the next candle opened at the same price and then just fell, right? But if we look back before, we did have some sort of a minor resistance, and this candle came to close on that minor resistance also. So we can't say price had a lot of pressure that it ended up falling all the way, but at this area there was some minor resistance. So the reason why I'm putting that minor resistance there, it's because since price hasn't retested this resistance that we broke, then we know price has to retest that resistance, because it might go all the way up there without retesting. That's very much possible, because it did the same thing right here. See, price fell through, it didn't break and retest on the weekly time frame, which meaning on the lower time frames it probably did. But that doesn't mean where price is at right now around this area, price is not going to retest, because see, even if it didn't retest this time, it does not mean that it won't retest. It might react to the minor zone that we're talking about around this area and then go on to retest. That means we might have something, since price is already near the resistance that we're talking about right now, the minor resistance that we're talking about right now, right, we might get something like this to retest this zone and then continue going up. However, it's also good to keep in mind that since this is clean price action, we might also get pretty much clean price action. But then the difference is, when this clean price action happened, right, the candles were strong. I mean, you can see like there were 3 bearish candles that were strong. That's like the 3 black crows pattern, but they were very strong. It's now different. Like if just the first candle is pretty much very strong, it was an engulfing candle, it covered like 2 candles previous. But then if we look at this side, right, we don't have that much of a strong candle. It's strong to some extent. Like if it was a daily candle or a 4-hour candle, we would say it's strong. But then for a weekly candle, this is not as strong as the previous price action, meaning there might be chances that price will come and retest before it goes up. So that means price will come to create a lower wick on the weekly candle and then continue going up. So if we're going to have a retest, then we're going to see it on the lower time frames. That's how we catch it. So for now, those are the only resistances and support that we need on the weekly time frame. So we have this one where price is close to, and then we have the previous one, the support that price broke. And then if price is to break this minor resistance, then we have our next resistance that price will reach. And also another important thing to note is if price does retest this area and then comes to break above this minor resistance, right, price will probably create a strong candle similar to this one. The reason why I'm saying that is for price to keep going higher, right, it needs to create support. That means price has to drop for it to continue higher. So since right now we have 3 bullish candles, we can't really include this. Okay, some people would include them, but they are very small for me to say to include them, and they are still in the range. Remember, last time we talked about this range. Our price was going to break out of this range, and these might be bullish candles, but they are very tiny bullish candles, and they were still in the range. And then price broke out, but we still don't have the retest, and we all know that there must be a retest. So even though we didn't get the retest that we're looking for here, that doesn't mean we can't get the retest this side. So that, and since the candles are very small, right, that means we have high chances of getting a retest, because if the candles are very small, that means they are losing the buying pressure. And if they are losing the buying pressure, that means a sell is brewing. So that means you have to look out. You can't get married to the buy setups. You have to look out for the sell setups. And since we are already on the weekly anticipating the sell setups, we must be able to notice them on the lower time frames when it happens. So right now, we might not get the same price action, but if price does retest, that means price retest, right, it creates it grabs all the liquidity it needs to keep on going up. That's what I'm saying. When price breaks this resistance, we might get a similar candle to this one, because price has grabbed the liquidity it needs when it went all the way down to retest, and then it will continue going all the way up. So putting your buy limits around this resistance is also a good idea. Yeah, so that's what we can take out from the weekly time frame. So when we go down to the daily time frame, it's still the same thing. The candles are losing their buying pressure. They are not very strong candles. If you want very strong candles, these were strong candles. That's a strong candle. This is a strong candle, and this is a strong candle. These are not strong candles. These are candles that are showing us price going up, but it's not really going up because they are very tiny. And if they are very tiny, price is gonna fall at some point. So I would say price might be creating similar price action to this. You see, price created small candles going up, and then the next thing you get a big fall. Price created small candles going up, and then the next thing you get a big fall. It's the same thing. Even though it might not look very similar, it was the same thing. Then price created a range, right? It did break out of our range, but the candles are still very small going up. That means we might get a big fall to retest the range and that strong resistance that we broke out from to continue going up. So that's one option to look at, right? Which goes along with the weekly analysis that we did. However, some people might say it did retest already, because if you look at this this green candle right here, this tiny green candle, it did sort of retest, as you can see, with the lower wick. That's on the maybe 1 hour time frame or 30-minute time frame, but that's for the lower time frames. We will need something that's significant to retest before we can see a huge move going up. However, we still have to keep in mind that we might not get that retest. So going on to our, there isn't much to like add on in the daily time frame, because it's all the weekly time frames. Like there is nothing, there isn't much going on. Then we go on the 4-hour time frame. Now with the 4-hour time frame is when things get interesting. This is the breakout, right? This is the big breakout, right? And then we have a retest. This is the retest that I talked about on the daily time frame, that some people might call this the retest. And of course, they can be right. That can be the retest. However, we still need a retest on the bigger time frame, because this was a very strong resistance. I'm not saying sales are going to happen. I'm just saying there is a chance they might happen. And since people are looking at a very strong pound, they are looking to buy more. But considering the candles, I wouldn't suggest that. I mean, the buys are still there. I'm not canceling the buys. I'm just saying people have to be careful with their buys at this moment, because these candles are not very promising. This is a promising candle, and this is somewhat of a promising candle, but after that, if you look at these candles, they are not that strong, and this is a 4-hour time frame, which raises some issues. Because if it's a 4-hour time frame, it has to make some significance for it to mean something, and at this moment it doesn't. So this is the resistance that price has to stay below for it to keep on going down. So right now we're just going to put this high, because this is the high that has been created today. And for price to continue all the way up to our minor resistance, it has to break above this resistance that was created today. This is the support that was also created today, and then this is from yesterday. So let's go on to our 1-hour time frame. So on our 1-hour time frame, it does get a little bit interesting. It does get a little bit interesting. So on our 1-hour time frame, this is what we're going to do. We keep the minor resistance, right? We adjust a little bit on the high that was created. And then we adjust the minor support, because although we might look for our sales when price breaks this low, right, that it's rejecting right now, price also has to reject the following support. This support might be a minor support, but price has to go below that support for it to continue going all the way down to this support. So this might be your first TP, and then this would be your second TP, which will give you more pips. So some might want to be careful and ignore this sell and wait for this sell to come through. However, we also have, or it's not necessary to put this support, but if you want to, it's a support. But these two are the most important supports that we have right now in this resistance, because if price breaks this resistance, then you can catch some pips to the next minor resistance, which has high chance of also getting broken. So you might get lucky. But right now, this is what we're looking at for today. So there isn't any need to go on the 30-minute time frame, but we will, just to break price down a little bit. This is our 30-minute time frame. So price went all the way up, right? Price went, let's actually start this. Do you guys remember Elliott waves? I hope you guys remember Elliott waves, or the small basics of Elliott waves. So if we were to count our Elliott wave, we would say the consolidations are not that they're not really saying anything, to be honest. Price is not saying anything. This is a bad market. I mean, it looks like it's trending, but this is not a market that you want. This is not a proper trending market. So if we were to look at our waves, right, we would say 1, a small 2, 3, maybe 3, 4, and then 5. Meaning now we are having 1, right? And then we're creating 2 to go on for 3, probably 4 to give us 5. And then from here we should get the uptrend again. That's how Elliott waves works, right? So if you get 5, if you get your 5 for the uptrend, that means price is going to correct a little bit. So it sometimes it's like it's A, B, C, which will still give us the down move, because if we say A, B, we should get C somewhere here, and then C will create the support that we need as the retest to continue the trend going up. So either way, that's like our second confirmation. It will still line up. So if I'm looking for a big buy on GPUSD, you would want a big buy around this price. If it breaks, this would be your price to enter. But then the good thing is, by the time price comes here, you have already collected 3 trades. The reason why I'm saying 3 trades is because maybe you took a trade when this low got broken, right, to this support, and then when this support got broken, you took another sell to this one, and then when this one gets broken, you take another sell to this one. And these are all perfect sells because we have clean price action. So they are very nice trades to look out for. However, if price refuses, all we have to do is to wait for price to go above this resistance, and price will go on to our next resistance. So we would say maybe price is creating support around this area. That means it's still the same formation as the one that we are looking at for the bearish formation. It's still the same pattern, only that this one price came down, created support. Now we should see it go to break this high, and then from that high we should see price continuing on to the next resistance. So that's what we have for GPUSD. So someone might want to set some sell stop right here, a sell stop order right here, for those who would like to, and then watch out for buys around this area, because this is a minor resistance. This was created today, and if you look at the left, there is no price action that's actually corresponding with this minor resistance, which gives it more depth on the minor resistance confirmation, however you take it. So that is the first part, right? Do you guys have any questions? I'm guessing no. Okay. So one thing you should know, right? On, was it the 4-hour time frame? No, it was the 1-hour time frame. I wanted to give you this tip, guys. If you see this, if you see a candle with no wicks, if you see a candle with no wicks, do you guys see this candle right here? Doesn't have any wicks, very similar to this candle. Also this candle and this candle. If you see a candle similar to these candles with no wicks, it's best not to get into the trade. The reason why I'm saying that, right, it's because when candles close without any wicks, right, there's no area for that price to range. That means there are no let's say this one is bullish, right? They didn't show us the sellers, especially in, for example, this one also they didn't show us the buyers, right? That means price is similar is this candle in the middle, right? This is an indecisive candle, right? I would say it's similar for candles like this without wicks. The reason why I'm saying that, right, it's because a candle without any wick, right, since it doesn't have any wick that it range, right, that means it can't do anything afterwards. So you might have a strong bullish candle without any wicks and see another strong bearish candle after that, because the previous bearish candle that didn't have any range to play around on. So anything can happen. So instead of price continue going up, you can see a strong bearish candle happening next. So it's always best to wait what's happening, to see what's happening before you enter. The reason why I'm saying that is because if you look at this price action, right, price made a nice break at this area, right, and then it gave us this first strong bullish candle, right, but then the next one didn't have any wick and we got an indecisive candle, right, and this is a very tiny indecisive candle that price could have gone up because there wasn't any resistance. And we have clean price action to our left, very clean price action that price had high chances of continuing going up, but price didn't, because this candle didn't have any wick, and then the next candle we had was an indecisive candle, right? And those are known for showing reversal signs. But the next one also didn't have a wick. So instead of entering when they close, it's best to set your stops or to wait to see what price is happening. So if this candle had created, right, you would maybe set your sell stops below the candle, right here, or you'd wait for this candle to form and close before you enter, so that it confirms for you that price is going to go down. However, this was a very nice formation to produce a sell signal, especially if the candle had any wicks. But since it didn't have any wicks, that means the selling pressure wasn't that much. That's why we have this candle that is less selling pressure. We need a wick. If we have a wick, that means the buyers have been beaten by the sellers. That's why price is going down. But without any wick, then we just have sellers. Where are the buyers? Without the buyers, price can't keep on going down. So that's why candles without any wicks are very dangerous. They need a wick for price to like continue going in that direction. Yeah. So when you see price candles without any wicks, it's always best to wait and see what's happening. Or if you're going to trade it, it's best to be careful. Yeah. I think that's all for GBP USD. We can do GPJ. The thing with GBUSD and GPJPY is they are the same formation. We can see that price created a high during Asian, right? And the worst part is GPJPY has actually been trending during Asia session better than pound USD. The reason why pound yen has been trending well during Asian than pound USD is because pound yen has yen in it, and yen was on during Asian session. That means price could move more. There was volume that was being brought by the yen. When it comes to pound USD, there was no market that was open during Asian session for those two currencies. That's why we get a better trend on this on pound yen. instead of pound USD. That's why I always say it's best to trade a pair for that session. This pair is good for Asian session. Euro yen is also good for Asian session because they have yen inside them, so they can trade better than pairs without any currencies that are on for that session. So price created a high, we have a low that's been created. And then also another thing that can show you that pi and yen well, it moves the same as pound USD, right? But it depends with what currency that's on right now, right? So we said pound yen was moving during Asian session because of yen, right? But now it's moving because of pound only. Yen is now close, and now it's moving because of pound only. So if we look at this price action, right, we see it made a drop, and then it made a small bullish candle. This is a bullish candle. It's this color because it's an inside bar, but this is a bullish candle, right? It's not as big as the pound USD candle. If you look at this one is bigger than the pound yen, which means price is gonna continue down. I'm very sure about it. Might not very sure, but it is high chances of continuing down because pound USD is some USD that's happening right now, and USD might be getting weaker, but pound is not as strong. That's why pound yen is a smaller bullish candle. It's pound yen is actually showing us the pound power right now because that's the only thing that's open, and we have a small bullish candle. So I wouldn't bet on the buys just yet because this shows that pound USD can continue going high because this is also an engulfing candle. But remember last week we talked about how the markets are making a move before London opens. So the market moves before London opens, they make a huge move, right? And then when London opens, right, they create a support or resistance and then make a strong reversal, but that reversal doesn't long and pushes price back lower. We talked about that last week. Markets have been doing that, but I'm not saying it's gonna happen. It's just something that I've been noticing more and more during markets. So what I'll be interested in seeing is how this candle is going to close. So if this candle closes anywhere inside the range of this body, then you should know that price is most likely going to go lower to this support, because for it to continue going higher it has to close above the high of this body, similar with pound yen. With pound yen, see, with pound yen, right, it made a strong bearish candle, right? And then it made an inside bar. An inside bar, that's a candle that closes, opens and closes inside the range of the previous candle. You can see this candle, it is a low, right? This candle opened inside this candle and still closed inside this candle. That's an inside bar. So an inside bar is also a signal and a confirmation for a trade. So when someone sees an inside bar, right, sometimes they set their buy stops around above the candle, or your sell stop below the candle. However, since we had a strong bearish candle right here, right, and we might say price was creating support, I would very much like to say that, right, it's still there, the option is still there. But if this candle that is opened now closes anywhere inside the range of our previous candle, then that means price is high chances of pushing lower than going up. If price closes inside the range of this candle and then goes up, or that's something that's happening inside the market. But if you're looking at the technical side, this pushes the price lower. So this candle that's printing now has to close somewhere above this range, and then you know that price is likely going to continue higher. So you start looking for buys. You wait for price to break this resistance to continue going higher. So right now, all we have to do is wait for this candle to close, right? And then the next candle will be your trade, or will show you where your trade should be. So that's what's happening on GPJPY. If price breaks this low, our next TP becomes very tricky because we have clean range, and if you look at our consolidations, right, this was our consolidations, very small, like it's like there's no consolidation right there. If you look at this, right, that means if I was to sell right here, right, instead of putting my TP, I would put my first TP here, right? But I would, when price reaches this area, put your stop loss on break even, because price is high chances that it will continue to any of these points. Because the moment price breaks this low, this is a free ride down. This was a free ride up. This will be a free ride down to somewhere here. This would be your range that you're looking for price to go all the way to. Price just has to break this low, because this is a bigger range. It's not big, but it's a bigger range compared to this one and this one. So if price breaks this low, price should continue all the way down to our next support, which is around this area, because these clean ranges keep on pushing higher, and the ranges that we had were very tiny. There is no range, like there's literally no range, because this was like a few pips, and that's an hour candle, which raises a lot of concerns. But yeah, that's all I am looking for. Let's see if we can look at Euro USD quickly. Oh, that's very interesting. Okay. The reason why Euro USD is very interesting is because guys, you guys see this candle? This was a strong bearish candle, right? See, this is not ranging. This is not trending during Asian as much as pound yen or euro yen and stuff like that, for the same reason as pound USD. The only reason why I think pound USD actually trended during Asian session, it's because pound has been strong lately since last week. Otherwise, there was no reason for it to actually trend, which ruins our trades. But for this one, it's interesting because see, price had created support right here, right, on these two candles. Price had created support and the resistance, and then this candle, this was the hour before London opened, right? That's our no trade zone. So this would have been our no trade zone. So you'd have set your sell stops below this candle and your buy stops above this candle. So by the time this candle reaches this area, you should have taken your first TP. That's if you were trading the no trade zone. But if you didn't and you're waiting for price to break out like it did, like you should, then this candle is retesting, right? The bearish candle we have right now is retesting for price to keep on going higher. So all we need is for maybe our 30-minute candle to close somewhere above there, then price would continue higher. But if our 30-minute candle closes somewhere around here, that gives us a good chance that the next candle that's going to form will close around the range of this candle. And if it closes around the range of this candle, price is most likely going to push lower, because this candle was the hour before London open one was showing us a bearish move for Euro USD. But now, since it broke out, this is a big breakout. There's a range around this area. This is a big breakout. We need to see some bullish moves on the current 1 hour candle for price to keep on going up. Because right now, price is still in the range. If this 30-minute candle on the 30-minute time frame, if it comes and closes below this the resistance that it broke out from, right, look out for sales around this area, because if sales happens around this area, price is most likely going to continue down, because we have a minor trend line here, we have a minor support here, right? Price comes and breaks, it's like, so I'm guessing they're trying to sell it, because if they wanted to buy it, they would have said their orders somewhere lower, but we have orders at 122, which means price, they might want to drive price lower, but therefore price to go all the way up, all the way above there, we have a resistance to break. So the next the minor resistance, which we're saying maybe today broke, would have been somewhere here, but we'll look at that at the lower time frame. And then we have a support right here. So this is our weekly, right? If we look at our daily, right, this is how our daily looks. So we'll just adjust our zones there. So how this looks, right, on the weekly, it's like the zones are on the top of the wicks on the weekly chart. You just have to adjust them so that they look proper to the time frame that you're trading. Remember, you always have to look at that one time frame that you are trading. Don't skip around through too many time frames. It's only the time frame that you're trading and the time frame below the one that you're trading. That's it. Don't play around on the time frames that you're not trading, because that will confuse you and you end up entering or reacting to zones that are not valid for that moment. So there isn't much to add on our daily, because there isn't much information that's going on, but I'll take note of this, right? We put it right here, we had a zone there, right? And then I would put the next zone around this area. So this is our daily time frame. Then when we go on the 4 hour, right? So this is what we were talking about. When you go on the 4 hour time frame, right? We had a minor range right here, or not minor range, but it's a range that was happening for quite some time. So we're saying price broke above, right? But then for this to be significant, or for it to mean anything, right? Price needs to break this area. This whole zone is an area. So if you look at the left, right, we have a zone that's very close by. It's this one right here. That's a zone, and this is a zone, and there isn't much pips happening around that area. There isn't much distance. That's when we would put something like this, right? Because that whole area becomes very important, because we have a zone right below the resistance that we previously broke, right? And then if you look at your left, right, even though the resistance is a little bit lower than this high overtakes this resistance, because now, even if we were to consider this resistance only, this one is still very close to it. There isn't a lot of pips between that. So that all becomes one resistance, because remember, a resistance is not a line, it's a zone. So this whole zone becomes very important, because for price to go higher, price now has to actually close above this area. Then we can watch price going higher all the way to this area, because if we look, we have clean price action. That would give us a very good trade. So entering a buy right now is very tricky, in the sense that price might react to this high, right, and get rejected, because this is a very strong resistance that it needs to break. Because even if you look at your further left, you still have this resistance that's going on, and it's still very close to the previous resistance that we're talking about, and the other one. So if you wanted to buy this trade, right, this was the perfect candle to buy it, because this would have given you enough pips for you to set your trade in on break even and hold it for price to reach all the way up there. But then if you didn't enter this trade and you're looking for buys right now, this becomes tricky, because it can find resistance around any of these three highs. So that's the first thing that you have to take note. So I would look for buys when price closes above 121,660. And then for sales, price, all it has to do for sales all price has to do, right, it has to close below this low. This is where things actually get interesting, because when we looked at our 1 hour time frame, right, when we look at our 1 hour time frame, right, this is actually where it gets interesting. Because when you look at your 1 hour time frame, right, this candle was actually before London session. That's our no trade zone candle, right? If you're using that strategy as we talked about before, right? This was our no trade zone candle right here. Price didn't even come all the way to break the low, right? And it went straight up. It broke the high, and this candle, we can look at it as the retest candle for price to continue higher. And then if you did manage to enter from here, right, that would actually give you room, quite some good room for you to get your trade from somewhere here, right, to all the way to this high, right? That's a good trade, because right now you have already collected your first TP around this area, because you entered here, this candle probably around this area. That's your first TP onto your next TP around this area. And from this area, you should watch out for a reversal, because that's the area that we talked about on the 4 hour time frame, right? So for sales to happen right now, right, the current candle that's printing right now, that's a 1 hour time frame, right? We looked at the 30-minute candle, right? And we wanted this 30-minute candle. To close bearish, a strong bearish candle. Okay, so this one is not actually a bad bearish candle, but it's not as strong as it would have been if it had closed with a with the candle that doesn't have this long wick, because now this is a long wick that shows some sort of a rejection. Even though it's not saying that, but it shows some sort of rejection. If it had closed with a full bodied candle, we would anticipate price to push lower. So if we were to expect bearish for price to turn bearish, to reverse and turn bearish, right, we would want price to respect this high, right? If it respects this high, when this candle respects this high, right, that means resistance is being established, right? So we would want price to come and close all the way inside the range of the previous 1 hour candle. That's from here, so it has to close around this area, right, around this range. But then since price is already closing, so this 1 hour candle is closing right now, that's where things actually get tricky, because that means the sales are in full control. That it invalidates the sell, the buys and full control. This invalidates the sales, because when this candle closed bearish, right, the 15-minute candle of the next 30-minute candle was supposed to close bearish. So what I mean is, we had a bearish candle, right, this bearish candle, right, and then that was the first 15 minute of the hour, right? And then we had this next candle. This candle was supposed to close, it did close well, not as good as it should have, but it did close okay. So it closed still in the range of the previous 15-minute candle, right? But then what invalidated the sales was what invalidated the sells was the next candle closed bullish. So if price was going to go lower, this candle had to close bearish. It had to close below the low of the 30-minute candle. So these two candles made the 30-minute candle, right? So this first 15-minute candle, it was supposed to close below. When it closes below, that pushes price lower. But right now, all what it did was it closed above, right? And it closed above, rejecting this low and inside the range of our previous 30-minute candle, pushing price higher. So for price to keep on going higher, now it needs to break above this high. So if this 15-minute candle closes above this, then price is being pushed high. That means our analysis on buy, retest, and then to go higher are working right now. So for price to go lower, all price has to do is come back and close below this support, and then price will go lower. It will even go low. It might even go as far as it might even go as far as let's see this candle. It might even go as far as this candle, because if price comes back, right, if it breaks this low, right, and closes inside this range, right, that means price is being pushed lower. And since we have clean price action, we have high chances that price might actually reach this low, because clean price action encourages the future price to also have clean price action right there, right, giving us this support. And when price reaches this support, we also have another confluence that's happening with a minor trend line that's around this area that gives us two confluence, and all price has to do has to break and close below. And when it does that, we have clean price action, which will push price all the way down to this low, which will go in line with our weekly analysis. So this is what we have for buying buyers and for selling buyers. For buying buyers, all price has to do is to close below this 30-minute candle. I mean this 1-hour candle it printed before, and then price will continue lower around this order block that we have right here. I think tomorrow we will talk about order blocks, because they're actually very quite interesting, and they can actually help in your trading, because they will tell you when to take your profits, and they can also show you where price is most likely going to reverse because of the orders. And remember, when price comes back to that area, it's coming back to that area, to an area close or an area that they actually made their orders. And this is a very nice order block. This is a very nice order block. That means price would come okay, let's put it on our 4-hour time frame. That means price would be coming all the way down to around this area, right? That means when price comes to down to this area, right, all it has to do is respect this trend, right? So it can go higher. It would be a nice correction for price to go higher, but price cannot break that low, because if it breaks that low, then price is continuing down. The trend is changed. Or if you guys remember what we talked about on trend lines, that means our waves are still continuing. That means all we had was 1, 2, 3, 4, 5. And this actually worked very well, because remember, 5 can go higher than 4, or it can go a little bit higher than 4, or it can actually, the high of 3, or it can actually close very similar to the high of 3, creating a double top. And if you're looking at how the banks trade, it also creates that illusion of them placing their trades close or to similar price to their previous trades. So this analysis also shows us how sales are very much possible if price breaks this low, right? But if it doesn't, right, then that means price is going to give us a higher 5. That means maybe we might have a 5 around this area, and then price will come down. And then when price breaks this that will be support by that time. When price breaks it, it will continue lower. Combat operations. This is not a time of victory. Just give me a minute, guys. Hello? What's up? All right, so that's what we have on the Euro USD. I think I covered much of it, but I think that's the most important stuff. That's what you need to understand right now. For you to buy, all price has to do is close above this high, and for you to sell, all price has to do is close below this support. But remember, if it closes below this support, right, price has to stay below. And also if it closes above this high, right, price has to stay above that high. That's the first thing. Now that's all we need to understand about Euro USD right now. It's still in an uptrend, but also notice that the uptrend has been there for a long time, and they have been trying to sell it for a long time also. It might happen. Now let's look at our GBP JPY. So remember, in our first stream, we discussed the trade that's happening right now. So considering that there might be new people right now, I'm not sure, but there might be. What we discussed was, remember, we discussed how Asian session, the yen pairs has been trading very well, and we discussed how that trade has been unnecessary. Not that unnecessary, but it has been unnecessary, because if you look at pound USD, it did trend. I think it did trend because pound has had some, it has been strong lately. Not that strong, but it has been strong. And then if you look at Euro Yen, right, Euro Yen did also trend during Asian, but Euro USD wasn't trending that well during Asian. That means the yen pace has been trending because of yen. That's why we talked about how it's important to trade pairs for that session. Yen, it's good for them because of yen. Now you can trade them also because of the pound and the euro. That's why pound pairs are actually some good pairs to work on, because you can trade them any session except for New York, of which New York, London is also open, so you can trade them any session. They are very good pairs to look at. So earlier on we talked about how price created this high, right? We had a high that was formed here, and then we talked about how price made a low here, right? And then the next candle that printed is this one. I'm talking about this candle, right? When this candle printed, it did not close below the low, and it did not break the high. It did not break the high. It also did not break the low. That means it's an inside buy, and we did talk about inside buys. Inside buys are actually good signals for you that a trade is coming or a trade is about to happen. So when you have an inside buy, some people prefer setting their buy limits above and their sell stops, their buy stops above and their sell stops below, just in case if price pushes to break the low. But I think the much safer thing to do is to wait for the next candle to print. Why? Because price can do exactly what it did right now. It broke the high, So your buy stop would have been hit, but price went on to close below, right? Which would have invalidated your trade and you'd be collecting an unnecessary loss. So it's always best to wait for the next candle to actually close below or above, to actually break and close. Don't just wait for the break, also wait for the close. Always wait for the close, because that will confirm for you. So earlier on we discussed how price created a resistance, right? And then it came down to create a support right here. And we talked about how there was a minor zone right here. So if price wanted to go higher, we talked about how do you guys see this is the 30-minute candle, right? The 30-minute candle had to close in this area. If price was to go higher, we needed a 30-minute candle to close in this area, but it didn't. Price rejected the zone. See, price made a low, right? Price made a low, created a small range, right? And then made another low, right? So when this low formed, right, it was safe to assume that price might retest this low it had created earlier. It's minor, but the retesting possibilities were still there. And then price would come to close all the way down there, which happened. So price made a new low. So price made a low, right? And then it gave you this range. When price gave you this range, this was your first signal that price is going to sell. Because remember, if price makes an impulse and then it makes a range or it makes a correction, the next thing that's coming, it's an impulse. So since price did give you the low and then it gave you the range, so when you're analyzing your range, none of the candles were bullish. This is the only bullish candle we have, but it's a tiny bullish candle with no buying pressure at all. The next candle was also bearish. No matter how tiny they are still bearish, which is pushing price lower. And that's what they did. They did push price lower and created a new low, right? So when it created a new low and then price came all the way up here, right? Price was retested, right? We can now say price was retesting because it failed to close above. But if price had closed anywhere above this area, right, then we would expect price to keep on going higher. Then what we would have said is price made a high and then it made a low to continue higher. That's what we would say. But price would need to come and close above this area. It would need to close above this zone for price to continue higher. So that's what we're going to say if price does come to close above this high. At the moment, price isn't closing above that high, right? So price did what we were expecting it to do. Price came down, created a low, it came to retest, right? And we did discuss how the 1 hour candle was supposed to close how the 1 hour candle was supposed to close below our previous 1 hour candle for price to keep on pushing lower. That's the trade that we're analyzing before the previous stream ended. So we did wait to see how this candle would close, and it did close below. This shows us how price is most likely going to push lower. So if price is going to push lower, right, this candle has to close bearish now. If this candle comes back and closes inside the range, our analysis is slowly being invalidated, because when price closes back above this small resistance, then the trend is continuing bullish. So for it to go lower, we need a candle to close lower. If a candle closes lower, price is most likely going to go lower. So we enter here and wait for price to keep on going lower. If it closes back in the range, then we've invalidated the sales. The sales won't be valid anymore. So we need maybe a 30-minute candle or a 15-minute candle to push lower for price to keep pushing low. So also, for those who are new, we also would like you all to keep in mind that GBP yen, right? Yes, very nice clean price action. We have clean traffic, we have clean traffic, we have clean traffic. If you look for the ranges that we have, right, we barely have any ranges, because if you look at this, right, this was a very small range. There's a very few pips on that range. If you see this, and then if you look at this range also, I don't even think you can call that a range. It's so tiny, like I don't even know what to call it. So for this price to continue lower, right, it has to close inside this range, right? So here's the interesting part. If price comes and closes below this low, right, then price is most likely going to continue to this low. And if price goes to that low, it's most likely going to continue to that low, because if you look at our ranges, they are very small. So price is most likely going to break through without any struggle. The only struggle that's at this point is at the range that we are right now, because now price has to close back into this range. So this candle needs to close lower, and when it closes back into this range, that means we might see some sort of small range also. But as soon as price closes below this range, right, the trend has changed. We're going on a bearish move all the way down there to this area. I think that's the strong resistance it broke to that area. But if price rejects this range, it has to reject this range for it to keep on going higher. So you might see price dipping and then going higher. That would continue the bullish trend. But then I wouldn't bet on the bullish trend as much at the moment. I know it's most likely going to happen. It might, but if you look at our trend, this trend has been going for quite a few days. It's not a very long time, but it has been going. And if you look at it, there is no correction, there is no retracement. We can't really call this a retracement. This is tying like, and this is even sideways on top of that. We need a retracement for price. So this price is getting steeper and steeper. This is a healthy trend. This isn't a healthy trend because price is just going straight up. So that means it's most likely that they are trying to fool people into keep on buying so that they can drive price lower. So they probably don't have enough buy orders for price to go a little bit lower, because price needs to go a little bit lower for it to go higher. Because right now it's not in a healthy trend, because it's not correcting. It's not correcting. Price isn't correcting down. It's just moving straight up, which is not a good sign. And like I always say, if you see a correction or a range, that's the best sign, because that shows you that a trade is coming. Right now it's not giving us that. It's just moving in a straight line. So we need to see a correction for us to get another healthy trend. So I would assume that we might get price to come all the way down. Let's say maybe this area. We might even get a wick down into this area, but I think the first important part would be this area. If price comes down to this area, then if you see some bullish pressure, price is most likely going to continue higher, because it is corrected. But if it doesn't correct and it keeps on pushes higher, that means the sales are going to come very soon, because it can't keep on pushing higher without correcting. I don't know if that makes sense to you guys. Do you guys have any questions? I'm guessing no. Okay.
No question.
We can look at gold. Just quickly. Okay, just quickly look at gold. So here's an interesting thing on gold. Gold ranges a lot, but when it ranges, it also gives you a very nice trade. Right now, I would look out for a sell. At the moment, I would look out for a sell. But if we look at the higher time frames on gold, right, we might say price made interesting. Let's look at the daily first before we start assuming. So this is our daily time frame on gold. I'm not going to weekly time frame. Even the weekly time frame is still pushing price lower. So if the weekly time frame is pushing price lower, you need to find out what is it targeting, because the thing with gold, right, it's in an uptrend. Higher time frame, no matter what it does, it's still an uptrend, right? This is an uptrend. But in that uptrend, right, it spends a lot of time correcting. The uptrends happen straight up and then it spends a lot of time correcting, which I assume it has been doing for all of this time. That's probably months. It's just been correcting. So if it's correcting for this low, you need to find out where exactly is it targeting, because what they're doing is they're targeting a lower price for them to buy and continue higher, right? So we would want to know where are they targeting is their lowest price, maybe around this area, maybe to wake up to this area, because if it gets into this range, then sales are most likely going to happen. So this is our target. So on the weekly, on the previous weekly candle, it also closed small bullish candle, but it's still pushing price lower. So this is what we're going to do. We are going to look at the daily. The previous daily candles have all been bearish, which is also good, and it has been consolidating on the 4-hour time frame. It has been consolidating on the 4-hour time frame. This is our 4-hour time frame. It has been consolidating, right? So we can say price made an impulse, right? This was our correction, and probably this is the next impulse. But then the next impulse maybe wave 1, 2, and 3 to continue down is our next impulse, right? So I think, or this is how I'm analyzing it, right? For price to actually go lower, it can't break this consolidation. If price breaks above this consolidation, price will go higher, and that will change a lot of things. Price has to respect this high right now, which would make sense because price has been making higher lows. See where the high here, it made another high, it made another high here. So the only sad thing is price is making a low right here, so we need a low to be made around this price. If price makes a low around this area, right, then that should push price lower to this low, and as long as price reaches this low, price is continuing with the bearish trend because it has broken out of the consolidation and the impulse is continuing. But if price comes and breaks this high, that will be your first sign that something is happening, and then this high, that will be your first sign that something is happening, and then this will be the confirmation that the trend has changed. Because if it goes above this high, right, we have clean traffic, that means price is most likely going to give us a clean move all the way to this high, and as long as price reaches this high, price is more pressure on the bullish side, and when it has more pressure on the bullish side, that's invalidating a lot of time frames, which will cause problems, and price is most likely going to push higher. Because even if you are to look at it again, right, we even have clean price section as soon as price gets to this high. So if it breaks this high, we still have clean price